In this free video course, you will learn everything you need to know about volume for trading crypto, forex, stocks, or any other financial market. By the end of this course, you will not only be able to use volume to improve your trading, but you will also learn about multiple different volume indicators and settings that most traders don't know about. Alright, so let's begin this course by taking a look at what you can expect to learn in today's video. And the very first thing we will talk about today is, of course, what is volume? And also, of course, why volume is so important when it comes to trading. Next, we will of course also talk about how volume works. Because in order to use volume effectively in your analysis and as a result take better trades and make more money, we of course need to know, how volume works. So guys, I definitely recommend to pay close attention to chapter 2. Next, we are actually ready to start taking a look at some volume trading strategies in a step-by-step manner. And here we have many different methods to use volume. First of all, in trends. And trading trends is one of the most common and, in my opinion, one of the best trading strategy, because when we trade in the same direction as the trend, we of course have the trend on our side. You might have heard, the trend is your friend and so on and so on. And that is in many cases often true. But how can we use volume together with trends? Well, we're going to take a look at that step by step. Another trading strategy, which is also very popular and can be very powerful, is breakout trading. And we will talk about both breakouts here, but also something called fakeouts. So a fakeout is basically a breakout that fails, and these moments are very important to spot because they can both be good trading opportunities, and if you are a breakout trader, they can be important moments you want to avoid. So understanding volume and breakouts is also very important. But next, we're also going to take a look at a reversal volume trading strategy. So how do we use volume together with reversals as well? And now, last but not least, we're also going to take a look at some of the best volume indicators. And all of the indicators I will show you guys in this course are available on TradingView. And if you don't have TradingView yet, I actually have a special link down in the description and top comment of this video that you can use to try out TradingView Premium for free for 30 days. And if you decide to upgrade, you will get a $15 bonus. But now guys, without further ado, let's get started with this course. Alright, so now then, what is volume in trading? Well, the definition here is that volume is the number of assets traded during a specific time period. And these assets could be, for example, stocks, crypto, or forex. And the time period here could be pretty much anything. It could be the daily time frame or maybe the 1 hour. But to summarize, volume is the number of assets during a specific time period. So now let's actually take a look at a few examples of volume. So first of all, we could have a stock on the daily time frame. So what is volume in this case? Well, in this specific case, it's the number of shares that were traded during that specific day. So for example, if you take a look at this image right here, we have a Google chart on the daily time frame. And here on the bottom of this image, we actually have a volume indicator. So all of these bars measures the amount of volume during that specific day. So for example, if you take a look at this green candle right here, we can go down to the volume bar and see that in this particular case, 61.7 million shares were traded during that specific day. And we have another example right here. If we take a look at this red candle right here, we can see that during this day, 37.3 million shares were traded. And later on in this course, we will take a much deeper look at the volume indicator, and I will also show you guys more advanced indicators like the volume profile. We will take a look at the money flow index. So definitely, guys, stay tuned for these indicators. But for now, all you need to know is that volume is the number of assets traded during that time period. Another example is, for example, Bitcoin on the 5-minute time frame. What does volume mean in this case? Well, in this case, volume is the number of Bitcoins that were traded during those 5 minutes, right? Or in other words, the number of sats that were traded during those 5 minutes. Yet another example here is Forex, and a common Forex pair is USD Euro. So we could have USD Euro on the 1 hour time frame. But here, when it comes to Forex, volume is a bit harder to measure. So many volume indicators will instead, when it comes to Forex, measure the number of ticks. So not the number of Forex pairs that changed hands. A more common method is to measure the number of ticks, or in other words, the number of price changes that occurred during that time period. And in this case, we have the 1 hour time frame, so the time period would be 1 hour. But alright, so now let's take a look at some very important volume trading basics. And the first thing you need to understand about volume here is that every single trade involves both a buyer and a seller. This is a pretty simple concept. In order for me to buy something, someone else have to sell that thing, right? Every single transaction has a buyer and a seller. But this is important to have in mind when it comes to volume. And this right here is just repetition. One volume equals a single transaction between a buyer and a seller. Now let's take a look at what does it mean when we talk about high volume. Well, high volume indicates strong interest and high liquidity. And in simple terms, liquidity here basically means how easy it is to sell something. So for example, if you have, let's say, a Tesla stock or an Apple stock, if you want to sell that stock, it will be very easy because there's always tons of buyers available that want to buy your stocks. So in that case, we say that the liquidity is high. But if you instead look at your house, if you want to sell your house, can you sell it in 1 second to anyone? Well, your house is harder to sell because there's not as many buyers available here. So when we talk about houses and real estates and so on, we say that the liquidity is low. And what high volume basically indicates, as I said, is high liquidity, but also a strong buying or selling interest. To dive a bit deeper, we can say that high volume indicates active trading, right? Which means that we have many buyers and sellers, and it also indicates ease of trading. So if you want to buy or sell, you can do that quickly and in a smooth manner. And what about low volume? Well, low volume is pretty much the opposite, right? So low volume indicates weak interest and low liquidity. So for example, once again, you can think about houses. Houses tends to have very low volume because they are not bought and sold all the time. So that is a great example when it comes to low volume. But you can also think about maybe a very small stock or maybe an altcoin which doesn't really have buy orders and sell orders flowing all the time. That is another example of low volume. So low volume indicates inactive trading, which means that we have fewer buyers and sellers, and it also indicates more challenging transactions, right? So larger trades, if you want to trade a lot in a low liquidity environment, this can actually lead to your trade significantly affecting prices as well. So that is another thing to keep in mind when it comes to low volume. And here, just as a quick example, we have two images right here. This one at the top is an example of high volume. How do we know that the volume is high? Well, you can see here that we have very large volume bars on the volume indicator. As I said, we will take a very close look at the volume indicator later on. But for now, we can just notice that tall volume bars indicates high volume and a high trading activity, while like down here, we have very short volume bars that indicates low trading activity and low volume. All right, so before we continue here, I want to give a big shout out to all our new channel members. You guys are making these videos possible. I spend a lot of time and effort on these videos, so if you want to give back while at the same time getting access to exclusive content, please consider becoming a channel member by clicking join below this video or on the channel page. Now let's jump back into the course. But alright, so now let's take a look at something very important, and that is the volume price relationship. Or in other words, how does volume relate to the price? You know, in order to get a comprehensive analysis, we of course need to look at both the price and volume. So let's take a look at this. The first thing we need to understand here is that the color of the volume bar matches the color of the candlestick. So here on the example, you can see when we have a red candle, we will have a red volume bar. When we have a green candle, we will have a green volume bar. So for the green volume bar here, this volume bar basically occurs when the price closes higher than it opened. So for the green candle, the open is right here. So this right here is the open, and the close is right here. So basically the price started at the open, and when the candle is done, it was here at the close. And these candles can be different time frames. They could be, for example, daily candles. In that case, every candlestick represents one day, but they could also maybe be 5-minute candles. In that case, every candlestick represents 5 minutes. But the important part here is that the candle will be green if the close price is higher than the open price. And when we see a green volume bar, this represents buying interest. Because even though for every single transaction we have both buyers and sellers, the reason we can think about green volume bars as buying interest is because during these green candles, the buyers are in control, and it is the buyers that are actually pushing the price higher. So for green candles, and this is very important, this is how I think about volume, you can think about volume as how many buyers are supporting the move. Or this is at least how I do it. So when I see a green volume bar, I think about it as how many buyers are supporting the move. And the opposite is of course true for the red volume bar. So the red volume bar occurs when the price closes lower than it opened. So as you can see for this red candle, it opened right here. So this is the open. It closed down here. So this is the close. We can clearly see that the candle closes lower than the open. And this is why both the candle and the volume bar is red. And the red volume bar, of course, represents the opposite of the green one, which is selling interest. And a good way to think about it, or at least how I think about it, is how many sellers are supporting the move. So when we have a red candle and a long volume bar, we know that many sellers are supporting the move. But when we have a red candle and a short volume bar, it means that yes, we have a bearish candle, but not many sellers are supporting the move. And this is important that you keep in mind throughout the rest of this course. So now, to demonstrate what we just recently talked about, I think it's crucial to take a look at an example. So in this example, as you can see, we have two identical candles. We have two green candles, or in other words, bullish candles, which means that both candles open down here. During the candle, the price went down, it went up, but both candles closed right here. So both candles closed right here. We have the exact same price movement. But the important difference between these candles is that for one candle, we only had 10 volume. So if this is a stock, you can think about it that only 10 stocks were traded during this candle. But in the other example, we had 10,000 volume, which means that we had 10,000, if we have stocks as an example, we had 10,000 stocks traded. And now my question to you guys is, which of these candles are more bullish? The one to the left or the one to the right? Or in other words, which of these candles are more significant? Well, to answer this question, remember how we can think about volume. When it comes to green candles, we can think about volume as how many buyers are supporting the move. So in the case to the left here, we only have 10 buyers supporting the move, while on the example to the right here, we have 10,000 buyers supporting the move. Because we have more buyers supporting the move, this candle right here is more significant. You can think about it as more traders are agreeing that this price increase is valid compared to this move right here. In this case, it's only 10 stocks traded. So maybe this move was caused by only one trader. So the candle here to the right is definitely more significant. But alright guys, so now we are finally ready to take a look at a volume trend trading strategy. And we will do it in a step-by-step manner. So first of all, what we need to understand here is that volume helps us understand the strength of a trend. Because remember that we can think about volume as how many buyers or sellers are supporting the move. So we can think about volume as how many buyers or sellers are supporting the trend as well. And let's begin here by taking a look at uptrends. So for uptrends, one thing we're looking out for here is that we want to see price increases with rising volume, or it doesn't really have to be rising volume, but we want to see lots of volume, right? We want to see strong buying interest when the price goes up. So in other words, we want to see strong buying interest that supports the upwards movement, right? So for example, if you take a look at this example here to the right, you can see that we have a clear example of an uptrend. The price is clearly moving up right here. But one very interesting thing you can see about the volume is that not only is the price moving up, but we are seeing the volume moving up together with the price as well. And that's a great sign, because that shows us that we're seeing more and more a buying interest as well as the price going up. So that is something we like to see. You can also see here that during the next strong impulse move towards the upside, we saw yet another sharp increase in the volume. So that is very nice to see. So when we see this kind of rising volume in uptrends, this is an indication that the uptrend is healthy and likely to continue. When it comes to technical analysis, of course, no indicator can predict the future 100%, but volume is one thing we can use to sort of at least improve the probability of the trend being healthy. But what about the opposite here? What about if we have a price increase with falling volume? Well, if the volume is falling but the price is going up, that is actually a slight warning sign, because that is an indication that the buying pressure is weakening. And if the buying pressure is weakening, this means that the uptrend may be losing strength here, and we can start looking out for potential reversal signs. But remember here, the volume decreasing is not alone a strong signal that the price will reverse. But this is an indication that, we should at least be aware of strong reversal signals. Another thing I do want to point out here, I want you guys to once again pay attention to this image right here, is that as you can see in this image, we had the price going up, but then we had the price going sideways or even falling for a bit right here. And if you look down at the volume during this particular part, we can actually see that the volume starts going sideways or even falling right at this part. And now you might wonder, is this a good or a bad thing? Well, because we are in an uptrend, this is actually a good thing. Because if we would see the price decreasing here and with lots of volume, what does this mean? Well, this would mean that many sellers are supporting the downwards movement, and that would be a bad thing for an uptrend. But in this case, it's a very good sign that the volume is decreasing while the price is pulling back. This right here is exactly what we want to see in uptrends. So if you want to, you can feel free to, maybe take a screenshot of this video, or, if you are a channel member, you will be able to download all of my personal notes. And that is also a great way to support the channel. So, if you want to, consider becoming a channel member by clicking join below this video, or going to my channel and simply click join. I really appreciate all the support. But now then, let's actually continue here with our volume trend trading strategy, because we also, of course, have to take a look at the downtrend. So for downtrend, pretty much the opposite of what we recently talked about applies. So when we see price decreases with rising volume, what does this mean? Well, this means that we have strong selling interest that drives the price down. And this right here is of course very bearish and indicates that we have a strong downtrend. So for example, if you take a look at this image right here, you can see that we have a very strong move towards the downside. And what makes this move even more bearish here is that, as you can see, the volume was increasing during this move. So we have many sellers supporting the move. Once again, during the next impulse move to the downside, you can once again see a strong surge here in the volume, meaning that once again, many sellers are supporting the move. So that is definitely a bearish sign and an indication that this is a strong downtrend. So price decreases with rising volume indicates that the downtrend is healthy and strong. But what about if we see price decreases with falling volume? Well, once again, in this case, the opposite applies. So in this case, it means that the selling pressure is weakening, right? Because if we have falling volume, we don't have as many sellers supporting the move. So this right here is a sign that the downtrend may be weakening here, and you want to look out for bullish reversal signals. Here you can look out for price action signals like candlestick patterns, but you can also of course look out for market structure signals as well. And once again, one more thing I do want to point out here, I want you guys to look at the image here to the right, is that in this trend you can see that we had a pretty sharp upward sloping movement. We had a pretty sharp pullback here in the opposite direction of the trend. But the volume here actually gave us a hint. You can see that when the price was rising, we actually saw the volume decreasing. And this means that the buying interest, or the buyers supporting the upwards move, was getting less and less. So this is actually an indication that the price might continue to the downside. And this right here is exactly what we're going to talk about next when we talk about volume convergence and volume divergence. Alright guys, so now it's time to take a look at the volume convergence divergence trading strategy. So this is basically a method of taking a look at the price and the volume, as well as if they are going in the same direction or if they are going in the opposite directions, which is what is known as a divergence. And once again guys, you can feel free to pause this video right here and take a screenshot or whatever, or if you become a channel member, you will be able to download this page and hundreds of other pages and at the same time support the channel. But yeah, now let's take a look at this in a step-by-step manner. So for this table right here, first of all, we have the price movement, then we have the volume movement, then we can see here if it's a convergence or divergence. We get the signal here, and I also have written down the interpretation. So let's go over this in a step-by-step manner. So first of all, when we have the price increasing, we have price rises, and we have volume increasing, this is what is known as a convergence, because the volume and the price goes in the same direction. And as you know from earlier in the course, the signal here is bullish, because when we have the price going up and the volume increasing, this means that we have many buyers supporting the move. Or in other words, strong buying supports the uptrend, and this makes the uptrend more likely to continue. So that right there is the first signal to look out for. But what about when we have the price rising and the volume decreasing? Is this a convergence or divergence? Well, this is a divergence, right? Because the price goes in one direction, the volume goes in the opposite direction. And the signal right here is bearish. Why is this signal bearish? Well, think about it. If we have the price going up and the volume going down, it means that less and less buyers are supporting the uptrend. So we have a weakening uptrend, and this right here is a potential reversal, or at least a potential slowdown of the uptrend. So this right here is a bearish signal, or at least a warning signal. But now then, what about the third option here when we have the price falling and the volume decreasing? This right here is a convergence. Why? Because the volume and the price is going in the same direction. But what about the signal? Well, this right here is actually a bullish signal. Why? Well, because if the volume falls at the same time as the price falls, it means that less and less sellers are supporting the downtrend. And this is actually an indication of a potential reversal to the upside. Once again, this is not alone a signal that will confirm a reversal, but this is more like a warning signal to look out for reversal, price action, or market structure signals. Last but definitely not least here, we have when the price falls and the volume increases. This right here is a divergence. The price goes in the opposite direction of the volume, right? And what is the signal type? Well, this right here is of course bearish. Why is this bearish? Well, the price goes down, the volume increases, more and more sellers are supporting the downtrend. This indicates strong selling supports the downtrend, and this makes the downtrend a little bit more likely to continue here. So these are basically the four different combinations of volume, convergence, and divergence. And now I want to ask you guys if you can find any pattern. Well, what we can see here is that convergence, right, when volume and price goes in the same direction, is bullish, right? Convergence bullish, convergence bullish. But what about divergence? Well, divergence bearish and divergence bearish. So here we actually see a pattern that when the price and volume goes in the same direction, the signal tends to be bullish, and when the price and volume goes in the opposite direction, the signal tends to be bearish. Alright, so now the time has come to talk about the volume reversal trading strategy. And for now, as you can see on the image right here to the right, we have something called DCC, and we will talk more about that, what that means very soon. But what we can see here is that when that signal appears, we actually had lots of volume, right? You can see on both of these candles, we had lots of volume, and this is something we will need to pay attention to when it comes to reversals. So when it comes to reversals, in general, high volume means that we are seeing a stronger move, or in other words, a more significant move. So when we see reversals, it's important to actually look at the volume, because the more volume behind a price movement, the more significant and the more reliable the signal tends to be. So we can actually think about volume when it comes to reversals as a confirmation of the reversal. So for example, high volume during reversal patterns, like, for example, candlestick patterns, increases the likelihood of a true reversal. And this is where the example comes in. So let's say we have a bearish candlestick pattern, right? Candlestick pattern are basically short formations of 1 to 5 candles that either indicates reversals or continuations. But in this case, we have a reversal candlestick pattern, which is called a dark cloud cover. And this is where DCC, this is what DCC means, dark cloud cover. Here I used an indicator that automatically finds candlestick patterns, and that indicator is available on, I think, all TradingView paid plans. And if you want to try TradingView for free for 30 days, I do have a link both in the description and the top comment of this video, so feel free to use that one if you want to try out this indicator. But if we see a candlestick pattern like this appearing together with high volume, this suggests a stronger bearish reversal signal. And if we once again switch the attention here to the image, we can see that, before this pattern appeared, we have an uptrend, then we actually saw the pattern, and very importantly, we also saw lots of volume, and after this pattern, it successfully reversed the price to the downside. So this was an example of a successful candlestick pattern, and we can clearly see that exactly when the pattern appeared, we had lots of volume. So that is, something you can look out for when trading reversals. But alright, so now let's take a look at a volume breakout trading strategy. And first of all, we need to, of course, know what a breakout is. And a breakout basically occurs when the price moves sharply, either above resistance or sharply below support. And this basically signals a potential new trend. So if you, for example, take a look at this image right here, you can first of all see that we have a clear resistance. What do we mean by resistance? Well, the resistance here is the level where the price fails to break through multiple times. You can see we got a touch 1 time, 2 times, 3 times, 4 times. You can see that multiple times the price tried to push above this level. But then suddenly, and also very sharply, we saw a strong move above the resistance. So this right here is a great example of a breakout. And you can also see that after the breakout occurred, this led to a massive move towards the upside. But what do we actually look out for here during breakouts? Well, just as with reversals, we're looking out for high volume. Because remember, what does high volume mean? Well, when we are seeing a green candle, like we are seeing right here, high volume means that many buyers are supporting the move. So when we see a strong breakout, if you are a bullish trader, you of course want many buyers to actually support and confirm that breakout. So high volume during a breakout is something to look out for. So once again, just to repeat, what do we want to look out for? We want to look out for significant spikes in volume when the price breaks the level. And to be more precise here of the volume, it's easy to say, just look out for high volume bars. But to be precise, what we want to see is that the volume bars here should be much longer compared to the previous volume bars. As a rule of thumb for breakouts, you can look out for volume bars that are at least 3 times the size of the previous volume bars. That usually gives a pretty strong signal that you are seeing a volume spike here. So you can, this is not a precise rule, but around 3 times the size of the previous candles does give you a strong signal of a breakout. And once again, these significant spikes suggest that the breakout is valid here, or at least more likely to be valid, and that the trend after the breakout is more likely to continue. But alright, so now then, how can we use volume to avoid false breakouts. So as you can see on this image right here, we once again had a resistance level. You can see we got a strong reaction right here. The price went up and we almost tested this level once again. But here at this point, you can see at this green candle right here, we actually pushed above the resistance, but then quickly the price reversed and started to fall here. And what are the signs we can look out for when it comes to volume in order to find these false breakouts, either to be able to avoid to trade these false breakouts to the upside, but we can also actually use these false breakouts to short them when it comes to the resistance or buy them when it comes to support. So let's take a look at this in a step-by-step manner. So first of all, what we're looking out for here is that when we see low volume during breakouts, what does this mean? Well, if we see little to no increase in volume or even a decrease in volume when the breakout appears, this suggests a lack of enthusiasm among the traders. So once again, let's take a look at the example right here. If you take a look at the candle that broke out, so this green candle right there, you follow the arrow down to the volume bar, you can see that we saw pretty much no increase during the breakout. You can see we saw a very little increase here, or even no increase, and this right here is a warning sign that this might be a false breakout. Low volume during a breakout doesn't confirm that it's a false breakout, but it's definitely a warning sign to pay attention to. So here, just to repeat, this increases the probability of a false breakout and as a result, a reversal. So definitely pay attention to these small increases or even no increases in volume. So now I want to show you guys a few volume indicators that can be really powerful if you know how to use them. And I will also talk about the different settings you can change to potentially improve the indicators. And by the way, all of these indicators you can find in TradingView, and some of the indicators are free and some of the indicators you need a paid plan. But if you want to try out TradingView Premium for free for 30 days, I do have a special link that you can find both in the description of this video and in the top comment of this video. So make sure to use that link, because if you then decide to upgrade, you will also get a $15 bonus. But the very first indicator I want to show you guys, let's open this one up. So to do this, we want to go up here to the indicators tab in TradingView, and now we simply want to search for volume, because the first indicator I want to show you guys is the standard volume indicator. So let's open this one up, and now as you can see, multiple volume bars has appeared here at the bottom of the screen. And later on, I'm actually gonna show you guys how we can change the settings here of the volume indicator to potentially improve it and make it easier to read. But first of all, let's just take a look at how to actually read and understand this volume indicator. So first of all, as you can see, we have for every single candle here, we have a volume bar. So for example, for this green candle, we have a volume bar right here. For the next green candle, we have a volume bar, and so on and so on. For this red candle, we have a volume bar. And if you want to read the exact volume for a specific candle, so let's say we want to read the volume for this green candle right here, then you simply want to look up here in the upper left corner. So for example, for this volume bar, you can see that we had 552 million volume. If we instead move to a day with less volume, so for example this day right here, you can see we had 173 volume. On this day we had 374 volume, and so on and so on. And what you also of course can notice is that the volume bars will have the same color as the day here. And remember, we think about green volume bars as how many buyers are supporting the move, and we think about red volume bars as how many sellers are supporting the move here. But let's take a look here and see if we can find any interesting development. Well, here for Nvidia, we can actually see something very interesting. So you can see here we actually had a significant resistance. Why was this resistance significant? Well, you can clearly see that here we had a very strong reaction, and also look down to the volume, very high volume bar. So this is a significant reaction. We saw another reaction right here, not as much volume, but still a clear reaction of the resistance. Once again here, we had some slight reactions, not a lot of volume, so this is not too significant. But what I want you guys to pay attention to is when the price broke out, you can actually see in this case we saw a massive breakout, and we even had a gap here. A gap is a very strong, in this case, a very strong movement towards the upside. But look down to the volume when this happened. We saw a massive spike in volume. And remember from earlier in the course, this means that, or this high volume makes the breakout more significant and also makes the following uptrend more likely to occur. And as you can see, after this breakout, we actually saw a massive move towards the upside. But now guys, let's actually take a look at how we can change the settings of the volume indicator to potentially improve it and potentially make it easier to read. So let's go up here to the upper left corner and press on settings. Here we have a few inputs. So if we go to style here, you can first of all see that we have the normal volume, growing is green, falling is red. But one setting we can choose here is that we can choose to have a moving average of the volume. So if we check this one, and let's actually also make the line a bit bigger, and now let's go down here and press OK. Now you can see that we have a blue line. You can see we have a blue line on the volume indicator. And this blue line is basically a moving average of volume. And I think that right now it's based on, the moving average is based on 20 volume bars. So if we look at, for example, this point on the volume, you can see that this blue part right here basically tell us what was the average volume of the last 20 days and so on and so on. And we can actually go back here to the settings tab. Let's say we want to change the length of the moving average. For example, a common length here is 14, because many momentum indicators like, you know, the RSI and even the ATR and so on tends to use 14, or in other words 2 weeks here when we are on the daily time frame to make its calculations. So let's actually change to 14 here. And now you may wonder, you know, how, well, it's nice that we can have moving average on the volume, but how can we actually use this? Well, one could argue that you can use this, you know, to easier see the trends in volume. So for example, right here, remember that when we see a downtrend, what we want to see on the volume, if we are a bear or if we want the price to continue, is that we want the volume to rise, because more volume means more conviction for the sellers. But here you can actually see that the volume was falling during this part. And when we see falling volume, this means that we are seeing pretty much less and less sellers supporting the move. And this is an indication that we are talking about a potential reversal to the upside. And we can see that Nvidia actually eventually reversed here. So if you want to, you can use the moving average of the volume to sort of easier see trends in volume. But for me personally, I'm actually not using the moving average. I have a pretty easy time to see trends in volume without it. But if you are new when it comes to volume, it can, you know, help out a bit visually. But I'm just gonna keep the volume just like this. But alright guys, so now let's take a look at our second volume indicator. And let's start by opening the indicator up. So we wanna go up here to the indicators tab. And now we want to search for volume profile. And then we want to actually type visible, or no, we want to just search for volume profile here. And as you guys can see, we have tons of different volume profile indicators created. You can see where it says community here. All of these all of these indicators where it says community are indicators created by the TradingView community. But we also have a few volume profiles that are created by TradingView. And the one we're going to use in this video is called Visible Range Volume Profile. So let's actually open this one up. And as you can see, now we actually have some volume bars appearing here to the right of the screen. You can see now the volume is actually to the right here. And what does all of these bars actually tell us? Well, now we can see at what levels on the chart did we see the most volume. So for example, this level right here, where you can see the tallest bar, means that when we are looking at the chart, as we're looking at the chart right now, this area was the area where we saw most of the volume traded. So this right here was a very significant area where we saw lots of buying and selling happening. And you can actually also see here on the bars that we have a red part and we have a blue part. And this basically shows you how much of the volume was controlled by the sellers and how much of the volume was controlled by the buyers. So this can also give you some indications. But another thing about the visible range volume profile is that this one will make its calculations based on the chart you're looking at right now. So if you, for example, zoom out a bit here, you will actually notice how the volume profile automatically changes. So now, when we zoomed out, you can now see that the most volume from this perspective, how we're looking at the chart right now, was of course traded in this range right here. You can see that during this range we had the price was at this area for a very long time, so of course it accumulated lots of volume. But this is one thing I really like about the visible range. So let's say you are a long-term trader, then you might want to look from a more zoomed out perspective. But if you are more of a short-term trader, you might want to look at a much shorter term perspective. So for example, right here, you can see we can zoom in a lot and the volume profile will change. But alright, so now you might of course wonder, you can see that we have a line right here on the screen. This line is called the POC, and this right here stands for point of control. This is pretty simple. This is just the line where the most volume was traded. But now guys, let's actually change a few settings. So to do this, we want to go up here to the upper left corner once again, and we want to press on settings right here. So first of all, you can see that we can display the values if we want to. I don't think that's something we want to do. That makes the chart pretty noisy. We can also change how wide the boxes are here and so on and so on. But the first important setting I want to show you guys is this one called VAH and VAL. This one stands for value area high and value area low. So I want you guys to actually check both of these settings, and now we can press OK. So now you can see that we have two more lines. This is the value area high, or VAH, and this right here is the value area low. And what does these lines actually tell us? Well, these lines tell us that 70% of all volume was traded between these two lines. So here we can see that most volume was traded during these two lines, and of course these two lines will change depending on how we look at the chart. So if we zoom out, now you can see that 70% of the volume was traded between these two lines, and so on and so on. Now let's actually go back here to the settings, because we can also, if we click on inputs here, we can change the settings. So as you can see right now, for the value area volume, it says 70. This means that between the value area high and value area low, it's 70%. But we could, let's say we change to 90%. Now you will see that this area will of course increase, because now 90% of the volume was traded between these two areas, and so on and so on. So we can change the settings, but the most common one is to keep it at 70 right here. Another setting that I like to use is the row size here. So right now the row size is 24. That means that we have 24 lines here to the right. But if we want to make it more detailed, we can actually, for example, change it to 100. Now you can see that we have a much more detailed volume profile here. We have much more in depth here, the volume. And this can actually be a very useful thing, especially when we zoom in here to some shorter time frames. It can be very useful to have more detail about the volume. And now let's actually talk a little bit about how can we actually use the volume profile. Well, many traders will use it something like this. They will say that, okay, so here we had lots of volume. This means that this right here is a support or resistance area. And in my opinion, this doesn't really work. It's not really the right interpretation. We can see in this case that the price actually bounced off this level, but I think this was more a coincidence, because these areas where we have lots of volume will more often be the sort of trading ranges. They will not be clear support levels. The actual key levels will many times be just above where we have had lots of volume. So you can see this level. Let me actually show you guys a bit more clear here. If we draw a horizontal line of the resistance we talked about earlier, remember we had resistance, 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 you can actually see that this level will be just above, or if we have a resistance, just below where lots of volume was traded. Why is this the case? Well, when we break a key resistance, like we saw right here, remember the gap, this usually leads to a strong move towards the upside or strong move towards the downside, at least if we have a strong breakout. And here you can see we did see lots of volume, we did see lots of signs that this is a good breakout. So this was actually a good breakout, and then we tend to see a nice follow through. But when we see a good breakout like this, you can see that the price tends to move fast, and this will actually lead to very low readings on the volume profile. So one of the things I'm looking out for when it comes to the volume profile is more to look out for the areas where we have very little volume, because these tend to be areas where the price have moved fast in the past, and because the price have moved fast in the past, it increases the likelihood of the price moving fast in the future as well. So if we, for example, zoom out right here, we can take a look at yet another key resistance level. Once again, right here, you can see we had a very key resistance. We saw resistance 1 time, 2 time, 3 time. We saw a massive breakout right here. And once again, take a look at where is the resistance. Well, the resistance is exactly above where we saw lots of volume on the volume profile. So exactly above this part here where we have lots of volume, this is where we saw the very nice breakout. But yeah, guys, this is just one way I like to use the volume profile. The volume profile has many use cases, and I'm definitely not saying that this is the correct way or this is the only way. This is just one of the ways I like to use the volume profile. But feel free to experiment with the volume profile, experiment with the settings to find, what works for you. Alright guys, so now we are ready to take a look at our third indicator. So let's open up this indicator. So what we do is that we head up to the indicators tab in TradingView, and now what we want to search for is money flow index, just like this, money flow index. And once again, we have multiple different versions created by the TradingView community, but we just want to use the standard money flow index created by TradingView, so make sure to choose this one at the top right here. So now, as you can see, an indicator has appeared here on the chart. If you are familiar with TradingView indicators, this one pretty much looks like an RSI. We have an indicator here that oscillates, or in other words, moves up and down between a value of 100, which is up here, and 0, which is down here. But now you might of course wonder, what does the money flow index tell us about the price? Well, as we can hear on the name money flow, it basically indicates how the money flows. So are the money flowing from the buyers or from the sellers? But to be more precise here, the money flow index is an indicator that combines two things. It combines price and volume. So the money flow index tend to move in the same direction as the price. So for example, right here, the price is moving up. So if the price is moving up, the money flow index tends to also go up. But the money flow index also uses volume. So when we see an upwards price movement, like for example right here, and if we also see lots of volume, this will lead to stronger upwards movements on the price. And once again here, you can see here we had a downwards movement and we also had lots of volume. This will lead to sharper decreases on the money flow index. So it's basically, you know, like a combination of price and volume, and the volume makes the indicator move either, you know, faster or slower. So it's basically volume multiplied by price. It's a bit more complicated, but I won't go into detail into the exact calculation here. But now let's actually change a few settings. So let's go down here to the bottom left corner and let's press on the settings tab right here. Just the first thing I want to do here is that we are on the styles tab and I want to make the line a bit more thicker just so you guys can see it more clearly. And the first thing we can notice here is that we actually, just as with, for example, the RSI indicator, we have an overbought and oversold area. And the overbought area is actually 80 and above, and the oversold area is 20 and below. If I once again compare with the RSI indicator, for the RSI, the overbought is 70 and above, and the oversold is 30 and below. But for the MFI, we have 80 and 20. It's basically based on how the indicator is calculated and so on and so on. But you can also, of course, you can change these values, but I do recommend to keep them as they are. You could actually also, this is something you could do, you could even uncheck these ones, because I'm not a very big fan of the overbought and oversold for the MFI, but I will talk about that more later. And as with the inputs here, we can see that the standard is 14. Of course, this one is you can definitely change, but because most of indicators have the standard of 14 for this video, let's just keep it at 14, keep it simple. So I'm not going to change so many settings here. I think I'm just going to press OK here. But now, so there are basically two main use cases, at least that I know of, that traders use the MFI. The first one, as I talked about, is to use it as an overbought and oversold indication. So the theory goes that when the MFI is above 80 here, that it means that it's overbought and it suggests a potential reversal to the downside. The opposite is true for the oversold. When the MFI is below 20, like right here, it suggests that the price is oversold and that we are, you know, a potential reversal is likely. However, I don't really like this method and I don't see too much value of it. For example, let's just take a look at this point right here. Here, the price is overbought. But if we look at what actually happened to the price, well, after this point, the price just continued higher and higher. So if you would have shorted the price right there, you would have definitely lost some money. However, in my opinion, a better way to use this indicator is to look for divergences. And what are divergences? Well, that is when we have the price going in one direction, like for example right here, and the indicator going in the opposite direction. So in this case, we have the price printing higher highs, while the indicator clearly goes in the opposite direction. This right here is what we call a bearish divergence and actually indicates a potential reversal to the downside. So why does this indicate a potential reversal to the downside? Well, the price is moving up, but the money flow from the bulls, the bullish money flow, is going down. So in other words, even though the price is going down, we can see that the volume here is decreasing, and this will lead to the money flow also decreasing here in relative terms. And remember, when the price is going up but the volume is decreasing, that means that less and less buyers are supporting the move, and that is an indication of a potential reversal to the downside. But here you could, for example, say, can't we just look at the volume indicator? So here we have the price going up, and we can clearly see that the volume is going down. Well, that's definitely one use case. Many traders only use the volume indicator, but if you are going to use the MFI, I would, probably not use this one as overbought and oversold. I don't think that makes a lot of sense. I definitely do think a better option is to look out for divergence. Alright, so this video is coming to an end very soon, but first I want to thank you all so much for watching. I also want to give a big thank you to all our channel members. You guys make these videos possible. To support the channel, consider becoming a member by clicking join, or simply drop a like on the video. And last but not least, when you are ready to continue your trading journey, I highly recommend checking out this playlist. It contains all the educational trading courses I have made so far, and more is coming very soon.